Good morning, retail traders. I'm Washboardjim. I'm going to teach you an easy way to trade. This is the sneaky snake trade strategy where I talk about chart patterns, moving averages, and being in the now. So I've been in another room kind of helping out a little bit, and there's a lot of beginners in there that are catching on and asking me a lot of questions about my strategy. So I wanted to come out and kind of clarify my strategy and make it a little bit more simpler to understand on how I trade knives. Now, I'm probably one of the best knife catchers out there today, and we're going to go ahead and start off, and I'm going to show you my setup, how I set this thing up every morning. Usually I have my watch list over here on the left. I have the TV blurring down here with CNBC or Schwab, and then I have my chart to the right. So part of the strategy is talking about being in the now and knowing chart patterns and moving averages. So basically, I got a template that I studied. I studied real hard, and I learned every one of these patterns, what was bullish and what was continuous, what was reversal patterns, and what could be continued to a downside on a bear flag. So I sat and I studied every one of these patterns, and it made me a much better trader by doing that. And along with that, I took the time and I studied the candlesticks that leave them patterns, that develop maybe some kind of idea that you're going to get a breakout or a pullback. So I Googled in bullish and bearish candlestick indicators. Three candles that can give me an idea of which way the trade's going to move once it breaks out of that snake or out of that flag. So I got them two down. Now copy and paste or Google bearish and bullish candlesticks. Same thing with chart patterns, bearish and bullish chart patterns. Every one of them leads out of a snake. Every one of these will lead out of a snake. What's a snake? It's a knife. It's the knife of the trade on how to catch a trade. Apple's had a great run, so I'm not going to go into too much about this, but let's see what it looks like just on the daily for a second. We might see a swing trade on this. I'm going to clean this up. This was a double bottom on the yearly. So this was an idea. We had a new low on Apple. Here we had a wedge, a falling wedge with a 1, 2, 3 and a big old breakout to a double top. So that's part of that pattern. 1, 2, 3 and then the breakout. So I tell people, this is what I talk about. It's a perfect pattern to get out of this trade. If you can count to 3, you can trade with me. This is a falling wedge. So we come up here 1, 2, and then we come up here the second time down, third time. Now we're entering the sweet spot between 3 and 4. If this thing don't break out real soon, it's not going to break out. So 1. If you count to 3, you can trade with me. If you can count to 4, you might make a little more. So there's your knife and your falling wedge. 1, 2, 3, 4. Boom, to a double top out of the trade. Same thing here. We have an inverse head and shoulders. Another fallen wedge. So we got another fallen wedge, and it dips down there and comes back up and breaks out of that channel. And then you're out at the 63, or you want to go ahead and run it up to the 200 and when earnings come out. And then we had the big breakout to get out of the trade. So another falling wedge. The next one, Tesla. I got this on the 1 minute. We come in the morning. I clean this up. So we have a big breakout and then it pulls back. So I draw my snake in here, my knife. Whoops, that's the wrong one. There's my channel. 1, 2, 3, 4, and we break out. We got double bottom down here. We break out of the snake. It pulls back and creates an inverse head and shoulders. So we got the left shoulder, head, right shoulder, and then it goes ahead and breaks out of that head and shoulders. Comes to the second time, third time, and touches that shoulder line. Plus we have a wedge. So we got inverse head and shoulders, and then a wedge. And it breaks out the 200, and you decide to go ahead and sell up here at the top, right into close, and get out of the trade. There's your resistance level right here on the bottom of that channel. Right over here. And then we end up topping out right there. The next one's a SPY. We come in here, we're looking for the pattern. We have a nice little breakout, pulls back, creates another falling wedge. We got an inverse head and shoulders. We have a left shoulder, head, right shoulder. Then we count to 3, 1, 2, 3, and we're out of the trade at a double top. We run it all the way up to a double top, and we get out of the trade by the end of the day. Using the moving averages, we're bouncing off the 200. Falling wedge, 1, 2, 3, 1, 2, 3, boom, to a double top. Out of the trade. Para had news yesterday. Had a nice little bounce, and then pulled back to my support at 1285. How did I get that? It's a good question. From this previous high right here, that pre-market low. I mean that after hours low, so it had to have been here, this previous high. Pulled back, so I'll be watching this. This thing can pull back more, maybe hit the inverse head and shoulders right here, and find a solid support. You got your left shoulder and your right shoulder, so I'd wait probably QQQ. Nice little breakout in the morning, pulls back and creates a flag, so we jump in the trade on the 1, 2, 3. We got 1, 2, 3, 1, 2, 3. It breaks out off the 200 SMA on the 1 minute time frame for a second confirmation, and then you break out entry, inverse head and shoulders. You got your left shoulder, your right shoulder, and it breaks out the triple top and holds the 200, and then you decide to go ahead and sell it at a double top and get out of the trade. Or you get out of the trade right here. NVIDIA, 1 minute time frame. We had a nice breakout, so we're waiting for that flag to show up. Wait for the flags. Wait, if you're brand new, don't take a trade until you see a flag. And if you can count to 3, I guarantee it, you can make money with me. It's so simple. People make it a lot harder than it is. And I'm trying to make it to where it's real easy. The 3 is the sweet spot. So we got a symmetrical flag here. This is called a pennant flag. A pennant flag, which can be bullish or bearish. But we went ahead and broke out of that 3. Breakout, pull back. Everything that breaks out pulls back. That's very important to know. Everything that breaks out pulls back, and respected that trend line on that flag, which made it very bullish. Very bullish. Very bullish. And then we run it up to a double top and exit the trade. Or a triple top. 1, 2, 3. Everything comes in 3s. 3. 1, 2, 3. Amazon. So I'm coming in here in the morning. I'm looking at Amazon. We had a nice flag on this yesterday. Called this one out. Right there. She went ahead and broke out. 1, 2, 3, 4. Made a little bit more. Then today, same thing happened. Wait for them flags. Wait for them patterns. Don't take the trade until you see a pattern. Unless you have a different strategy. So we broke out of the gate. We bounced it off the 200. And we did a little thing right here. And then we found a flag. Right it open. So we got another pennant flag. Pulls back. Scalp it, get out of the trade, and then we create the symmetrical flag. This is what I call the beach trade. I'm in and out of these trades within minutes. So we develop a 1, 2, 3, and then we got the resistance lines up here, and we finally break out, and then we run it up to a double top and get out of the trade, and we're done for the day. And that's Amazon. Simple trade. Pennant flag, 1, 2, 3, boom, baby, to the top of a double top. You're out of the trade. This strategy works. I'm telling you. We had a big run on GME yesterday. Everybody was running on this trade. A lot of money was made on this trade. I called the pullback on it, and we nailed that pullback. So we're going to see if this thing can run up a little bit higher come Tuesday. I mean, look at the yearly candle. And we broke the 200. And we got this next resistance channel to get to, 1833 to 20 bucks. AMC, come in here first thing in the morning. I'm bullish on this again for the first time in a long time. It's just risky. All this is a momentum stock. So we had a breakout this morning, so I got excited. I decided to go ahead and wait for the pullback to the 200. We got a flag. We got a cup and handle. So we come in here. And we got a fallen wedge. We got a breakout with a fallen wedge. Then it creates an inverse head and shoulders on the 1 minute time frame. There's your head. And then you got another fallen wedge right there. And then she decides to go ahead and breaks out. Now this is AMC. 10-4. Look what happened. She got in right around 310, 315, and you sold it at a double top to 330 for 15 cents. Or you went long. I'm long in this one. Google. Another great trade. Clear drawing. We got a big long snake on this one here. You get in here with your channel. Draw it in. I'm going to teach you the secret of this trade right with this chart. Okay? We've got the snake. We know how to count to 3. I taught you how to do that. That's not that hard. Put one foot in front of the other. Soon you'll be walking out the door. There we go. I get a knock. Jim, we broke out of the snake. I said, well, let's wait for the pattern to show up, okay? Jim, it's running. No, wait for the pullback. Okay, that's what you say. You're always right. So I got my left shoulder here, and we pulled back to the right shoulder. So we got the breakout, we got the pullback, we got the left shoulder, and we got the right shoulder. And we jump in the trade. Boom, baby. So you had a 1, 2, 3 up here to get out of the trade. So we took it right here, and we run it up into close and got out of this trade. Bank of America. Come in the first thing this morning, looking for volatility. I see the flag. We got a double top exit idea to get out. Then we bounce off the 200 SMA. So we had a little inverse, we had a little head and shoulders right here, which is a bear flag. So I know that's bearish, that head and shoulders, if you look at that template. Right here. You get left shoulder, then you're going to have a knife. So we got a head and shoulders here, and we decided to draw the snake in. So we've got the snake drawn in now. Or let me see here. That's a pretty good spot because that's another head and shoulders. I like that. I just noticed that. Yeah, I'm going to stick with that. I like that. Usually I'll draw it down like this, which will work too. But I like this too. That's a good idea. I might look into that next time I'm drawing that out. So we got my little snake, 1, 2, 3, and we broke out on the third thing. As I always say, wait for that pullback. And then we created an inverse head and shoulders. Right there. And bounced the second time up. Then it came back again and bounced again off the 200. So I was still in the trade. And then we bounced off the 200 and ran it all the way up for a little exit idea, BAC. Still green all day long. We touched down a few times, so, you know, it's one of them kind of trades. IWM was one of them kind of trades. Starbucks, I was asked about yesterday. This is getting real cheap. All-time pandemic lows. So this even beats Biden's lows down here that we had in 2022. So I suggest that this might be a good buy to the upside. Starbucks to go long because you're so close to you're at the double bottom on a 3-year time frame. You got Baba on here. Baba's on fire. So we come in here. We had a big old two black crows. It created a little wedge. And then you got a double bottom, higher low to take the trade. Higher low means it's bullish. Double bottom means you've got your last chance. And then it goes below. You might be looking at a falling wedge created. So we broke out of that, sold it at the 200 first thing in the morning. WFC, same thing. These are all good stocks. These stocks all have a lot of money in the bank, and they're still tradable on knives when you're in an overbought market. Overbought. We're not overbought. Yes, we are. We're way overbought. Way overbought. I don't care. I'm sticking to my plan. I've been here too long. I'm not going to have no rookie tell me we're not overbought. Even novice traders say it, and I'm saying you're full of crap. We're overbought. Why you say that? Well, let's just look at one stock here and see. WFC, double top. Banks are doing good right now. We called a 1, 2, 3 inverse head and shoulders down here, and we've done nothing but run straight up without hardly any correction. But that's just, I mean, Meta, look at Meta. Meta's up 600%, 700% in a year and a half. Way overbought, way overbought, way overbought. I'm looking for more pullback, but I'm going to scalp it off these 3 black crows. So I come in here in the morning, we got 3 black crows. That's a bullish pattern off the 21. But I'm still think this thing's way overbought, but I'm still going to trade it. They were pumping this up at $530 to $600, $700, $800. They're full of shit. I'm talking about the fat cats. We've had a pretty good sell-off, so I mean I'm bullish on this thing right now to run it up. But we got to break the 200 SMA. It didn't like earnings. It's putting a lot of money in AI. I still think this thing can pull back more. But they'll forget about it. Traders have a short attention span. I'm bullish on TSM. We had a nice little play on this one here. A 1, 2, 3 breakout with an expansion pattern. I talk about patterns. Well, that's an expansion pattern, and that's what we're in right now. We're in a very volatile market. Very volatile. These started showing up about a month and a half ago. And I've been making killing on these spreads. They're huge. People don't understand. That's a bullish flag. It looks bearish, but I'm telling you, you get in the bottom of them spreads and run it all the way. Every time you get in one, it gets bigger and bigger and bigger. So we come in the morning. TSM, nice little breakout, pulled back to the 63 and respected that 200 all the way up. Disney, rated open. This is all about getting in the trade at open at the lowest possible price that you can get in it at. So we had a breakout, which is bullish, and then it pulls back. If you can count to 3, you can trade with me. If you count to 4, you might make a little bit more. So we got us a fallen wedge right here on the count of 3. 1, 2, 3, dip. 1, 2, 3, rip. That's a falling wedge, along with an inverse head and shoulders, along with a head and shoulders. So there's your bear flag. There's your bull flag. Jump in the trade right there if you wanted to. But there's your idea to get in the trade on the triple bottom, falling wedge. Now listen. 1, 2, 3, you can trade with me. If you can count to 4, you can make a little bit more. So we got 1, 2, 3, 1, 2, 3, 1, 2, 3, 4. Boom. Sweet spot. As it starts to squeeze 3 and 4, and you get to 5, 6, 7, you're in a long day. 3 and 4 is a sweet spot. That's where you want to be. I'm telling you. I know. And people that watch it go, God, I wish I'd have known this years ago. UAL. I'm coming in here. We got a fallen wedge. We got a double top exit. So we got another falling wedge. We count to 3. I jump in the trade and I run it up, pull back, run it up to the 200 and get out of the trade. 200 SMA is a resistance line. Then I think about it a little bit later and it pulls back into another falling wedge off the 200 with an inverse head and shoulders, which is bullishness, and we break out and hit the 200 again. And then we respect that pullback, and then we run up and get out of a head and shoulders. There's your left shoulder, your head, and your right shoulder. Bowling sucks. It's starting to show a little momentum. I don't want to trade this stock. I called this out as much as I didn't want to. Inverse head and shoulders at the bottom of the symmetrical flag. 1, 2, 3, 4, boom. Out of the trade. Inverse head and shoulders at the bottom. So I'm looking for patterns. I'm always looking for patterns. Double top, get out of the trade. Get out of the trade, rising wedge. Get out of the trade, head and shoulders. Get out of the trade, triple top. We got a continuation to the downside, descending triangle, bear flag, rising wedge, symmetrical flag, reversal, inverse head and shoulders. We got a falling wedge, double bottom, triple bottom. That's what I'm looking for. Inverse head and shoulders. 1, 2, 3, 4. I'm out of the trade. I'm out of this trade at the sweet spot. 5. I'm going to get the frick out of the trade. I'm not going to take any more chances. I'm going to save my money. 3 and 4, I'm going to make more. 5, I'm going to take a dive. SMCI. I'm having a little bit of problems here. There we go. We got it. We got a double bottom. We got an inverse head and shoulders down here at the bottom. Yeah, it's starting to slow down on me. Better do maintenance on Ameritrade over the weekend. So we got an inverse head and shoulders. Yeah, this will be my last one. Starting to have problems. So we get an inverse head and shoulders. Yeah, I got problems. There we go. Finally. So we got a snake breakout, pulls back to the right shoulder of this inverse head and shoulders, and we create a little flag right here, and we know to take this trade long because we hit that 20-day double bottom off of inverse head and shoulders. I got major problems with this now. So we had a nice little breakout. We got the fallen expansion pattern, fallen wedge, fallen bull flag. Off the 200 SMA. We got this support level here. So you took it off the 200 and run it up to the number 3, maybe got out of the trade. Or run it on breakout, pull back, and then got out at the double top. Now these contracts pay good. These contracts pay real good, SMCI. So that's it. I can't work with this platform right now. It's kind of messing up on me. But that's part of the strategy. Basically, catching knives off the moving averages, catching knives once it breaks out of the channel and creates some kind of flag, and then I take the trade. Then I'll know if it's bullish or bearish by the indicators of the flag and the indicators of the candlesticks that break out from that flag. So remember, memorize, study each one of these. Remember how to count to 3 and 4, where your sweet spot is, and learn these candlesticks, and I think you'll become a much better trader. And always remember, different times of the day you have to trade the market differently. You just can't go all out. The other day I lost time. I jumped into trade 10 minutes before the bell rung, and I made a huge mistake. I lost the money. I mean, I made a trader's mistake. I lost track of time, which I hardly ever do, and it cost me. So you always got to be on your toes. This is a sneaky snake trading strategy where I try to share for the beginner traders on chart patterns, moving averages, and being in the now. And at the end of this video, I'm going to show you the moving averages that I use, and that's right now. So let's see if we can pull this up. We've got the simple moving averages of the 50 and the 200. SMA, the 50 and the 200. And then below it, we've got the 9, 21, and 63 EMAs. I use the 200, the 50, and the 63 for entries and exits. And I use the 21 and the 9 to keep me in the trade. It identifies if the stock's bullish or bearish when I'm trading around with them. And those are the EMAs. So that's it. I wish everybody a great week. Study these stock patterns. Remember, there's going to be pullbacks right at open. Learn how to catch them knives. This one was off the 200 on the pullback, or even at the bottom down here off the 200 SMA with an inverse head and shoulders right there with a two-headed snake. You only see this on a 1 minute time frame. All this is done on a 1 minute. So I got you a two-headed snake right there with a double bottom. So I might have took that trade. Who knows? All right. Well, everybody have a great day.